All right, good day, people. All right, so I'm just going to do an analysis on a couple crypto projects. So we'll start with ZBEC, and then we'll go over to let's do Bitcoin. All right, so I'm on an hourly chart, and we got a classic head and shoulders pattern that is showing up on the hourly chart, and we've already breaking this neckline. So let me go ahead and just draw this up for you guys so you can be able to see. All right, we got over here, we have our left shoulder, we have our head, and we have our right shoulder here, and then of course we have our neckline. So price has broken this neckline. All right, and so we have our downside targets that where we can get to. Now, of course, we can do this. The old-fashioned way is to take it from the top of the head down to the neckline and then move this measurement here to get potential downside targets. I'm not a fan of that. I like to use the Fibonacci extension tool. So I'm just going to measure the impulse to where it stopped at the neckline, and then we're going to bring it back up. All right, and so we already have hit extension number 1, our first target. So it's been hit. Okay, now second target is here. I feel like we really can get to this level. So what I'm looking for is to add on a position at this 0.0043228 region. Okay, now worst case scenario, if we really get down here, we can get down to the 0.00332 area for the third extension. All right, but mainly we really want to focus on this first two. So we're going to hit this first one, looking for a little bit of recoil, and then we go back down and we hit these levels. Okay, now what I can do too is I can take this is the last particular major low before we went on to uptrend. So we can use this as an impulse wave, and we can use our Fibonacci retracement tool. All right, so we're just at the 50%. So remember that target level number 2 could be right at the 61%. This is a great area to take the trade to get out if I'm shorting. All right, so if I'm looking to short this in the leverage market, maybe using Blowfin, boom, we can get out here, we good. Now, if we pierce this 61 level, we definitely got the 70 and the 78 levels that can be hit. All right, so keep in mind that these levels can be hit. Now, for me, once again, if I'm looking to invest, all right, I've been adding on different positions as it's been pulling back. Definitely not trying to buy up here. All right, so of course these pullback zones are areas where I want to load. Now, like I said, I can hedge and I can short using leverage to get down to these levels. So this is a nice thing that's playing out. All right, so we got that. Now we're gonna look at Bitcoin. So, all right, and I think I already got an hourly mapped out on here. So for Bitcoin, we definitely want to get down to the 50% level. So that'll take us to 110,837 Bitcoin. We definitely want to see what price is going to do when it gets to this level. We definitely have enough room to get down to the 61%. I wouldn't be shocked if we just go ahead and really start the trend on down to get here. Historically, out of the last 11 years, 8 years has been bearish. The years that it wasn't bearish was in 2017, I believe, 2020, and 2021. And each one of those years had some form of a catalyst to convert a typical bearish month of August into being bullish. In 2017, you had the Bitcoin Cash. It did their stock. I'm not split. They did their what do they call it? It did a split, not a split. I'm using stock terms. They did the. Now I got a brain freeze. Fork. Sorry guys, fork. All right, so Bitcoin Cash is a fork. All right, and those who held on to Bitcoin was able to get that, the fork of Bitcoin Cash. So it was an incentive. So you had a lot of buying pressure come in that August, so that helped it. 2020 was a halving year, so that helped it. And then 2021, you had El Salvador came in and basically like, hey, we're gonna make this legal tender. They did that around, the July, August, around that time frame. So that helped too. They could give it a positive month. But historically, Bitcoin is really not really bullish during August. So there's that, right? We already had a new moon. Some of you know we use sometimes we use the new moon cycles, all right, and full moon. So I have to see when will the new moon be for August. All right, we could still see some bearishness coming in. As you look on the chart, you see the yellow dots are new moons. So whenever new moon, you see how we get the pressure down, and of course full moons we look for some type of pressure pushing up. So you see how we get a little bit of push down to right here, and then right here we get, see how we're forcing down. So we got to pay attention to when there is a new moon. Now we could be coming into a full moon. Could be coming in the next couple days or week or so. So we could see a little rally. So just keep that in mind. Other than that, everything looks pretty good. There's no alarm. Now, with rates not being cut, I think that really put a hamper into things. People don't like the macro developments. So let's go ahead and let's look at a higher time frame. Let's go out to the weekly, and let's see what's happening on the weekly time frame. All right, and this is what we're looking at. So we're in a clear high, lower high, higher high, lower high, higher high. So any pullback up in this area, I mean, we're good. All right. We just don't want to see something like this. We're gonna get a high up here and then just roll over, right? And we're not suspecting that. I mean, if something like this happened over here, I mean, of course, it's some type of catastrophic event that's probably happened on the macro level in the world. Here's the point of I'm not gonna say concern, because we can make money shorting, going long, it doesn't matter. And then we're long-term investors. Who cares what the price is really truly doing? All right. So you look at this. We got an engulfing on the weekly. It just engulfed this bar. Oh yeah, I'm looking for downside just based off it. It's a thick candle at that. Okay. So let's see. The last time we had something thick like that, I mean, this is decent. You see how they engulfed this one, and then we rolled on over. This candle engulfed this one, and we got a little deeper. Once again, we're on a weekly, so it's going to look a little different. But if you go back historically, you'll start seeing even this candle right here. You see how it engulfed this green candle? We rolled over. It doesn't look deep, but then once the time, if I do a measurement from where we rolled, where we engulfed, and bring it down, all right, it's not bad. It's 12% drop. So it ranges. It's not bad. So what would that probably look like if we do it from here and we get a 12% drop? I'm just using an example. Let's do that. Oh, I gotta charge. Where is that at? This puts us at around 101,000 Bitcoin. If we did get a 12%. So I'm just giving you an example of what I'm seeing on the chart, is that I see an engulfing bar, bearish bar at that, all right? And typically how we trade the engulfing bars, we do what? We go on short, we put our stop loss above the candle that was engulfed, all right? And we look left and we go into market structure, all right? And this is market structure, and this lines up. So if we were to get the drop, we would use this level to this level. All right, we got everything playing out. We crossed the 23% using our 23% Fibonacci strategy. Okay, what did happen? Price came back above the 23%. So we got a high probability that we definitely may come down to the 61. Now I said definitely, I'm just using those buzzwords, but it just got a high probability that we do. Well, guess what? If we don't, we don't. Keep it moving. We're not going to always be 100%. If I was 100%, I wouldn't be on no YouTube doing no videos. Tell you that. I'd be ducked off somewhere. All right. So, but I put my work out there. It is what it is. And the video will be time stamped. You can go back in time and you can look at it. But I do feel like at least 107,000 is a legit area to where we can get to. Okay. Now, worst case scenario. All right, we got all of this, but we got this key area we gotta get out. We gotta get over this hurdle. What I mean is, this has to hold. If this doesn't hold, we got a lot of room if we could go to the downside. Okay. As with anything, guys, you know, anything can happen in the world. We see it all the time. Countries go to war, cyber attacks, exchanges being attacked. It's all kind of crazy stuff, right? The Feds delaying again. Who knows? Okay, chaos can happen. But anyway, if we look at this structure, we got 61%. If we get here, it'd be a $93,328 Bitcoin. Right? So that's something to. Hey, can you stop? Thank you. My dog like to get its attention. But anyway, back to this. So let's look. Let's see if we did an impulse here, how it played out. We would have saw the same thing. All right. Now I want you to imagine that this impulse doesn't exist. So what happened was we got close. We broke the 50. We got close to the 61. We didn't get all the way to 72,000, but we got to 74,000. All right, and then we reversed and we didn't see anything else. So with this strategy, just like I just showed you over here, if 61% is one of the areas we want to get to, it doesn't have to. So what you want to do is you want to look at all these as zones. So you see I have a big zone right here. Right? It's no different than what it would be if we did the same thing back over here. All right, and so we don't always want to go to the T because it doesn't. It can just act as a zone. So even though I'm saying, 61% or whatnot, you have to look at this whole entire thing as like a zone where price can come into. All right, and that doesn't mean that it just have to touch the edge right here. We can come deeper in and can pierce it, but this is the zone that we really want to look at. And then if you really want to get down to it, if you want to know about supply and demand zones, I mean, clearly you see this right here. Price pause a little bit, and then we had this engulfing candle come through. Well, you take the top of the candle on the weekly, and then you take the bottom. All right, this is your demand zone. All right, now see how price came close back to this area, which this still is a region, and then it ripped, it took off. So we got a lot of people who probably was waiting for price to come back here, and they never really got filled because it didn't come all the way in. That's just one of the risks you just got to take. Like I said, you can't be perfect in this game. You can run your strategy, but sometimes it don't give you what you thought it should if you're looking for the most defined, price point. Now, that still means that this price still can come back down in here and collect some orders that wasn't collected. There could be some more buy orders that's sitting in here. There could be some more buy orders all over the chart. All right. This is a supply. This is a demand zone. Okay. This once was a little supply. Price dropped out, came back, bust through it. All right. Can we find some footing? It's a possibility. There's nothing to say that price would come down here to the 112-ish region or whatnot and find some stability and push up. That's an alternative. But what we do is we play what we play. We take our positions, we add, we take away, we short, whatever we need to do, regardless of what the other alternatives can do. All right, we have our main bias, we play our bias, and we keep it moving. All right. So those are things. Let's see what else going on if we put on some of our our moving averages. All right, so everything's still intact as far as we're in a bull market. Of course, we're above all three moving averages. This is the 20, this is the 50, and this is the 200. Now, here's the thing. This is setting up prime. Typically, when price is away from all three and it's looking like this, typically price want to fight to get back to the moving averages. The price does not like to stay away from the moving averages too long. All right, it doesn't. So we're prime for look like it want to fight to get back to an immediate. It's going to determine how fast though. Okay, this is going to happen because this keeps inching on up. I don't know where it's going to meet it, but it look like price really want to get back to touch these. So keep that in mind as well too. All right, let's take that off. Let's look and see what's happening on the Bollinger Bands. All right, so Bollinger Bands, we look like we tried to get outside the bands, but we're still within. But we got the median right here, sitting real close to that one-on-one area as well too. So price like to still come back to a healthy median as well. All right, and you see how we came outside the bands here in April, and we fought to get back in. So, yeah, keep an eye out on this as well too. All right, but other than that, I'm just gonna do those two. I just did ZBCN and Bitcoin. I did some more videos on some other crypto assets for the most part. And y'all enjoy your weekend. Hit the like button, subscribe. It's what you write them out.